Here's the roadmap after someone dies. You might file up to 3 different returns. Final Form 1040 reports the decedent's income up to date of death. Form 1041 reports the estate's income during administration after death. And Form 706 is the estate tax return based on asset values, not income. On the EA exam, they love mixing these up. So always ask, is this income tax or transfer tax? The clean rule is timing. Before death goes on the final 1040. After death goes on the estate's 1041. Think of rent, dividends, and interest. If it's received after the date of death, it's estate income. A classic exam setup is a rental property. Rents collected while alive go on Schedule E of the final 1040, and rents collected afterward go on the 1041. Now, when is Form 1041 required? 2 triggers. First, any domestic estate with at least $600 of gross income for the tax year must file. Second, if the estate has a beneficiary who is a non-resident alien, Form 1041 is required even with tiny income. On the EA exam, that non-resident alien beneficiary fact is the trap. People ignore it because the income is under $600. Deadlines depend on the estate's tax year choice. An estate can use a calendar year or a fiscal year, and the executor makes that election when filing the first Form 1041. The due date is the 15th day of the 4th month after the tax year ends. And if you need more time, Form 7004 gives an extension of 5.5 months. One more high-yield detail: termination year. The estate ends when assets and income are distributed and liabilities are paid. In the final year only, certain unused losses can pass through to beneficiaries, so they can deduct them on their own returns. But you don't get that pass-through in a normal, non-termination year. On the exam, watch for language like final year or estate closed. Quick perspective check. Don't confuse 1041 filing with estate tax filing. Form 706 is based on the gross estate value versus the exclusion amount, while Form 1041 is based on income and beneficiaries. It's totally possible to have number 706 because the estate is under the exclusion, but still have a 1041 because the assets generate income after death. Different tests, different returns. The executor of a decedent's estate chooses the estate's accounting period based on which statement? The options include choosing a fiscal year based on the date of death, choosing the year when filing the first return, needing IRS approval to use anything but a calendar year, or choosing based on the decedent's birth date. Think about it. When does the executor actually lock in that choice? The correct answer is, when filing its first return, the executor can choose the calendar year or choose a fiscal year. Estates are allowed to adopt either tax year, and the election is made on the first Form 1041. The tempting wrong answer is the one claiming you need IRS approval to use a fiscal year. That's true for some entities, but not for estates. Daniel Whitaker died in 2023. His assets keep generating revenue after death, and the executor elected a fiscal year end of October 31st. What is the deadline to file Form 1041 with no extension? The choices include April 15th, February 15th, January 15th, and March 15th. Think about it. What's the 4th month after October? The correct answer is February 15th. Form 1041 is due the 15th day of the 4th month after the end of the estate's tax year. With an October 31st year end, month 1 is November, then December, then January, then February. So the due date lands on February 15th. April 15th is the tempting pick if you assume calendar year rules.